So we're going to kick off this week's show with a Canadian pharmaceutical company whose stocks rose over 200% in a month, which then got them on our radar, and they go by the name Valeo Pharma, a Quebec-based firm trading under the name VPH in the Canadian Securities Exchange. Why the jump and what is it they do? Well, they are a specialty pharma company that commercializes prescription products in Canada. The model basically works like this. They find companies that have products in established drug markets that aren't in Canada, and after establishing a partnership with that company, they get the license to commercialize and market that product in Canada. So basically, they avoid the time-consuming and costly procedure of an almost never-ending research and trial phase and skip straight to the approval and sales phase. So as an example, let's take the latest product they got the go-ahead for, called Asperco. Back in April, they entered into a licensing agreement with Engine Pharma to commercialize this drug. Not so long ago, they filed for a natural product license with Health Canada, and soon after that, it was approved. So expect to see that product on shelves pretty soon. Now, if you're wondering what this drug does, well, it's aimed at boosting the immune system and primarily derived from the skin of an immature citrus fruit. So basically, commercialization is what they are mostly focused on. It's the same scenario for their other products like Reza, which is a medication used in the prevention of blood clots, and this one is expected to launch in Q1 of 2021. Now, the peak sale for this specific product is $30 to $40 million, and the sales margin is 55 to 60%. So whatever they make, they walk away with just a little over half of the revenue from that product. Have they grown since their establishment? Well, here's a very brief history of what they've done. They started in 2003 and focused on dermatology and hospital products. They sold their entire product portfolio to Valeant in 2014 for $27 million, then went back to business focusing on neurology, oncology, and hospital specialty products. In 2018, their revenue grew to $4.4 million and increased by 50% the next year to $6.6 million. And in that year, they were listed on the Canadian Securities Exchange. With all that said, they are expected to break even in late 2020. So that's a quick overview of their journey. But what about their stocks? Well, in the last 6 months or so, their share prices rose over 200% from approximately 30 cents to roughly $1.10, and even climbed to $1.73 at the end of July. That's a 440% increase. How high or low it will go will always remain a question, but we did stumble upon a report by IA Securities, which is a Canadian financial firm that offers a comprehensive range of financial products tailored to their clients. And you might want to know that in their evaluation, they put Valeo's price target to $2.30. Food for thought. Well, guys and gals, millennials and madmen, that's it for today. Do leave us comments, concerns, or compliments, and do not forget to push that subscribe button. See you next time.